Joe, how you doing, my man?
I'm doing awesome. How you doing?
Good, man. Well, welcome to the BYOE show. And today's going to be an interesting thing. I think this topic is really near and dear to every entrepreneur's heart. I think the concept of how do I acquire the right financing, the right maybe lending or capacity, whatever that may be for them. I think that's something that's probably an idea, a concept that people are just like, I want to do this. I know I need this, but how do I do it? And I think it's really hard. I think it's very segmented. So today, man, first off, I guess tell us, Joe, what is it that you really do, man? What do you do?
I mean, just to break it down and make it simple, I'm in the business lending space for small to medium-sized companies. I founded my company, National Business Capital, back in 2007. We've really become a specialty debt advisory platform. So business owners reach out to us and we help match them with the right capital. And we even do some lending ourselves and take on some risk. We do everything from SBA loans, term loans, lines of credit, equipment financing. And by having all the lender access in one place, simplifying the process, using some technology, also using really great people, we've helped fund over $2 billion to small businesses all across the country with a B, 2 billion with a B.
A question that I had based on what you just said, what is a small to medium-sized business? So for the audience, so we know what that is.
It's a great question because depending on who you ask will really make up, and everyone's got their different, the SBA and the government make, small business, they do it on head count. So depending on your industry, a small business can really be up to 500 employees, which is, I don't know, I think a little unrealistic. I don't know if I would think of a small business as 500 employees. I think especially, but when you compare it to all the businesses out there in the world, I guess technically it is. But, we really look at companies that, are doing, up to 10 million, as smaller, so 10 million under. Yeah. And then anything above, 10 million, we consider in our business, medium. And I'd say 10 million to about that 50 million spot. Really for us, and every lender and bank look at this a little bit differently.
Well, just to be clear, if a company had 500 employees and did 50 million in revenue, just to be clear, and I'm just using it as a joke, right? All those employees would make 100 grand and the business would be broke. So,
yeah, exactly.
For the government to define a small business as 500 employees, a small business that does 500 employees is probably doing, 150 million or something. That's got to be huge, right?
You need to. Yeah, exactly. Exactly right. Yeah.
And I think the stat is like 70, we could just make it up. 75% of small businesses today only have one employee and it's the owner.
Yeah, exactly right.
So you're helping small to medium-sized businesses, which in our case is probably somebody who does 10 to 15 million, or you said 50 or 50 million?
We focus on companies in the million annual revenue, 1 million to about 50 million is where we focus.
And you help them secure types of financing that can include SBA. I guess for like technicalities, there's different types of lending capacities, right? So could you give us some of like the most commonly known lending capacity somebody could have?
When you say lending capacity, what do you mean? Like or dollar amount or?
Well, okay, yeah, this is a good differentiator. Is probably type from what lending type is it coming from? Is it a traditional bank? Is it a non-traditional bank?
Oh, exactly. Yeah, absolutely.
What are we looking at?
So and where I focus is I've brought the best of the best non-bank lenders all together. And the reality is today, most companies, banks want to focus on funding deals 10 million and higher. And those are typically to businesses doing 50 to 100 plus million. We work with some of the nation's leading non-bank lenders and some of these are big institutions. Some of them are even publicly traded. And the reality is for most small to medium-sized companies in all industries across the country, for the most part, you need to work with non-bank lender today. And it might be a variety of non-bank lenders. If you're buying equipment, you want to use an equipment lender. If you need cash, there's term loan, line of credit products that are out there from non-bank lenders. They just make it easier. It's faster. It costs a little bit more, but the time you save and aggravation, I think, is well worth it. And that's really, where we focus. I think a lot of people don't understand lending, business lending, and, entrepreneurs are usually great at what they do, but they just don't understand or get the lending piece, and, things that we talk about with our customers is, banks, they're going to look at revenue, but they're going to look at profit. So you need to be extremely profitable. You need to have excellent personal credit. You need to have good business credit. But then banks are going to look at like 3 or 4 standard pieces of collateral, and banks are going to need to have collateral coverage. So the first is real estate, super obvious. The second, B2B receivables. Those are actually assets. So if you're selling to like Target, Walmart, or if you have a contract with like a Bain Consulting and they pay you in 30 days, you can leverage those receivables. And then it's hard assets like stationary machinery, manufacturing machinery, not, restaurant, equipment in the kitchen. And then also inventory. But the reality is, when you think about most businesses today, and you know this, David, most businesses a lot of times don't have real estate. Some do, most don't. They don't have B2B receivables. They're selling to direct to consumer. Or if you're in construction, you're in construction, doing progress billing. No one likes that stuff. So those receivables aren't really the strongest. And then a lot of businesses don't have inventory or don't have heavy machinery, especially in the new world that we live in today. So right there, so many businesses are knocked out of the box from a bank. And then if you have that, but you're like, yeah, I need like $500,000, the banks don't want to really a lot of times it's just too small of a deal now. So we're really going through, this has been happening, but now it's like really accelerating. And if you don't understand this as a business owner, you can get really frustrated and spend a lot of time like shopping around from lender to lender, and you'll get nowhere. So you'll have to work with a non-bank lender. You will pay a little bit more in interest. You will get your deal done. You get back focused on your business. It's either that or you sell equity.
I've when you say non-bank, I just think of non-traditional stuff, right? You're going to different types of lending capacities. So when I was starting out in business, I didn't understand this concept either. I didn't understand that banks didn't want to lend money. And so I remember I had a buddy of mine who came to me with this idea. This was probably, 12 or 13 years ago, maybe even longer. And he was like, hey, I want to open a restaurant. I said, what kind of experience do you have running a restaurant? Now, I was immature. By the way, I was an immature business owner at the same time, too. So I didn't really know a lot. But he said, he came to me because he said, hey, if you could help me, you could be my partner. And, at that time in my life or my career, I thought everything was an opportunity. So I said, hell yeah, I'm with it, man. So he says, there's this restaurant that's actually going to sell. And the restaurant that he was going to buy had been in business for like 50 years. So this was a business that had a proven track record of success with a model, and it came with everything, the real estate, the business, the name, everything. And I said, this is a great opportunity. So I said, let me help. And I jumped in and I said, okay, let's go to a bank. And I remember going to the bank, and the bank, I was banking with the local bank. So I went to them, and I didn't know them well. They didn't know me. And I walked in and I was like, hey, I'm here. I want to help. I want to get a loan. The guy's like, sit down. And he explained everything they needed. And everything they said, I did not have.
Yeah.
And I said, how am I supposed to get a loan here? And he says, look, man, to be honest with you, we're just not going to be able to lend you anything. And I remember walking out of that bank feeling like an idiot, for one, which I would imagine almost every business owner or at least entrepreneur at some point walks out of a bank feeling like an idiot, because you go to the bank thinking they're supposed to help you. I had cash in the bank. It wasn't like I was poor. It was literally, they just, they wanted things that I was just not prepared to give them. I didn't have profit and loss statements for that business. I didn't have the balance sheets for that business. I didn't have a lot of great credit at the time, because the truth was I was still starting a business, right? I didn't have a new EIN. Like, they asked for all these things right away. And then for them to just say, you know what, man, you're just not somebody we'd lend to. And I'm like, man, well, this sucks, And so that was my first encounter with lending. And realizing that it's harder than you think is really still more apparent to me today. I think so. So I guess kind of tell me, if somebody is looking for capital today, let's say for a piece of real estate, what does a non-bank kind of loan look like for them if they're looking to do real estate? Is that something you could do, or is that something you help with?
Well, my focus is not real estate. So everything I do is business lending. So it's people that are looking to use money to grow and scale their business. Real estate's just not where we put our focus. So we focus on lines of credit for your business, term loans.
Could you use those lines of credit to buy real estate?
I mean, you could, but it wouldn't really make the most sense. The terms and things like that, they're too short term. The structures don't make sense. And there's plenty of real estate lenders out there. If you listen, if you've got money to put, like if you're buying a piece of real estate that's an investment property and the rental's there and you've got, 30-35% to put down, typically 25 to 35%, depending on the property. I mean, you can get a lot of banks to get to do that real estate loan deal. So you just have to put money down. If you don't have money to put down, it's really hard to buy, real estate unless you're like pulling money from somewhere else. And, but
That's what I was thinking. You pull a line of credit, take that, and put the down payment.
you could absolutely do that and use that for the down payment, on the property. Definitely. And we've had folks that have done that. So you could use it, for your down payment money. But there's plenty of lenders out there that will focus on real estate. And if the real estate makes sense, if the cash flow is there and you've got the money to put down, there's plenty of lenders that will get that done today.
The reason that I mentioned real estate is because I encounter business owners every day who want to buy real estate, maybe not so much for rental use, maybe for what we call a self-rental, which is a property that they want to inhabit themselves as a business.
Well, so that's awesome. And then that changes everything, right? So you can use an SBA 504 to do that. So it's SBA has a 504 product, basically where you have to be buying real estate. You need to occupy 51% of the property. Yep. They can go up to I believe 10 million. What's really cool about the SBA product, it's 25 years. Depending on the bank, the rate will fluctuate. But you only have to put down 10%, which is really amazing. So you could go and buy a piece of real estate that your business is going to occupy, and you only have to put down 10%. Now, if you do a owner occupied, if you do a non-SBA deal with the bank, you'd have to put down about 25%. So it's a very, very big difference. If you're not going to occupy 51% of that real estate, then you would have to go the traditional commercial mortgage route, and you'd have to put down a lot more money.
Yeah, a lot down, terms that refinance every 5 years.
Correct. Yeah. Yep.
By the way, that's such a shitty way to, man, I understand the bank does it for a few reasons, right? To check our credit worthiness as a business owner and all that crap. But really what they're doing is they're just getting more fees, closing fees. That's all they're doing. A percentage here, a percentage there every 5 years. Is that standard in the non-bank world as well?
So in the, when I say non-bank lending world, I'm talking about specific, to business lending. So we're not, it's a very different structure than like a typical like.
Well, explain the structure. Share structure with.
Yeah. So typically like in the non-bank lending world, right now, there's a few different products. So the term loan products are typically 12, 24 months or 36 months. And then, short term, right? So you borrow money, you pay off in 12, 24, 36 months. Depending on the lender, when you're 30, 40 or 50% repaid back, you can borrow additional money. So if your business is growing, or if your business grows really fast, even faster than that, you can check back in and access more capital. So there's not like a reset with the commercial mortgage because you're paid off at that point typically. There's revolving lines of credit that are revolving, based on your revenue, cash flows, and then sometimes your receivables. So depending, and then typically those are just, really ever going and ongoing. And then depending on the lender, some, reserve the right or do a financial check-in, every 12 or 24 months. So you have to, provide them with updated financials and stuff.
They call that the receivables kind of like a factoring, right? Is that what it's called, factoring?
So there's factoring or ABL, which is asset-based lending. Well, they use a combination of your receivables, equipment, and inventory. And then, really you've got bank lending, which will typically get you the best rates. But even today in the bank world, prime rate's 8.5%. A lot of prime deals are prime plus 2 or 3%. So if you're prime plus 2, prime rate's 8.5 plus 2%, you're at 10.5% today. So, it's pretty wild. So that's like where commercial lending is right now from a bank, which is wild.
What's so funny is that my banker called me about, I don't know, maybe 30 days ago. And he says, David, do you need a line of credit? And I said, is this a joke? I swear that's what he said. And he goes, what do you mean? I said, I have never had a banker ever in his life call me and say, do you need a line of credit? Right? And he goes, well, we're releasing a new product and we pre-qualified you. And I said, okay, what's the line of credit? He goes, I think I can get you 250 unsecured, prime plus 2. And I'm like, so what's prime? He goes, 8. And I said, so I paid 10% on this money? And he says, yeah. And
Yeah.
I said, well, I remember there was a point in time where you could borrow money at 5, 6, maybe 7. We're at
Yeah.
now.
Oh, yeah. And sometimes higher. Yeah. That's just the reality. But, you've got to remember, one, I would call your banker back and I would take that deal. Some banks are doing, yeah. You've got to. And listen, prime rate's at the peak right now. It's going to come back down, right? Will it go up a little bit more from here? Your guess is as good as mine. I think we're probably going to pause. Could we see a quarter, half a point more? Maybe. But I do think that the Fed at this point is going to pause and see what's going on. I think the rates eventually going to come back in. But if you can get that and it's an easy process, you should take it. You also have to remember that's annualized. So if some unique opportunity comes up where you can, do something, buy something, and you're in and out in 30, 60, 90 days, you're paying, 1, 2, 3%. It's not a great deal of money.
Actually, that's how I factored it. I did take the deal. However, it was just interesting to me how, first off, they'd never wanted to ever lend me money like that.
Yeah.
And then secondly, the rate, I was like, shit, that's high. But then at the same time, the cost of money is just expensive right now. It would be so much easier just to go to the bank, grab cash rather than have to go and apply for a loan rather, which is what pieces you do alternatively. So yeah, just sharing that with you because you're right. When people say maybe a non-bank lending capacity of, let's say, borrowing for equipment and the interest rate is high, let's go at 15 or something. It's not that far away from what traditional
from the bank. Yeah. And equipment, equipment actually is the best because it's asset backed. So equipment's like 8, 10, 12%, which is pretty, it's pretty reasonable. It makes way more sense. You should always finance equipment and you'll know this, you can still depreciate it, but you don't have to lay out all that cash and pull that money out of your business, and you can finance it over a 3 to 5 year period. So it's crazy to me when I see owners use their cash to buy equipment. You can finance it through an equipment lender really fast and easily. We do those deals all day long. And then you could, you can depreciate that, right? So if you depreciate all of it in year 1, now you've lowered your tax liability. So to do 2 things, take that money out tax-free, put it in your pocket, or, take that money and reinvest it into your business, tax-free. It's a no-brainer.
How about, for an example, let's say auto or vehicle kind of equipment, like say say an air conditioner repair company, they want to add a few fleet vehicles. Is that something you can help with?
Absolutely. Yeah, we do those all the time. We've financed, whole fleets. What happens is typically you'll cap out at the, Ford, lending or whatever, at the dealership. And then from there, you'll bring in other lenders and, we finance, sprinter vans and work trucks,
I want like a
tractor trailers.
Sprinter with I've always wanted one of those badass Sprinter vans. I just don't drive enough. So, or I mean, I wouldn't be driving it. That's for damn sure. But I don't go in.
Yeah, I hope not.
I have a buddy who just bought a badass one. I mean,
Same here. It's awesome, and I enjoy using it.
oh, you got one?
A good friend of mine does. Yeah.
Oh, okay. I was like, damn, dude.
Yeah.
I mean, the truth is, I mean, after kind of like COVID and things, like, I don't know, man, it doesn't make any sense to drive that far anymore. I just do everything virtual.
Yeah. It doesn't make sense if you're on the road and you're using it. It's a mobile work station, which is I think what he uses it for. But yeah, you got to use it. Otherwise, just another big expense.
So tell me some of the underlying challenges that you see. Well, let's say you're the lenders. Like, what are some of the challenges? Like, why do people not qualify? And then we'll talk about alternatively how they qualify. So, like, why don't people qualify today? What should they be preparing for so they could qualify?
In the bank world, most people don't qualify because of what I mentioned earlier. The four type of assets, real estate, B2B receivables, inventory. I mean, we focus on cash flow, and what's happening. We'll look at like what's happened last year, but we look at what's happening right now, in the last 6 to 12 months, in the last few months, but more importantly, what are you using funds for and where are you looking to go? Under 250,000, we can get people approved in hours and we can fund them the same day or next day. So it's really fast, and it's all based on the cash flow in your bank statements of your business. Once you go above 250,000, typically most lenders are going to want to look at your financials, profit, loss, and balance sheet. What I find from most small business owners is they don't have that stuff readily available and aren't up to date with a lot of that stuff. Most are, but there's a lot who are not. And then what I see is business owners just, are very reactive. They're not proactive in their planning when it comes to financing, and they see opportunity and they just run right in. Oh, I can go, there's a deal on a piece of equipment. They just go buy it and use their cash. I'm going to go build out tech and software. And they're like, yeah, no, I'm not going to borrow money. I don't want to pay interest. And then they just start, doing it out of cash flow. And then they underestimate what it's going to cost. They underestimate a project. And then their cash flow is crushed and depleted. Their financials become out of whack. And then like, oh my God, I got to go apply for financing. And then it makes their options limited and more expensive. So, you really should always be looking out the minimum 6 months. But in my business, I'm looking out 12, 24, and 36 months. I'm always trying to understand where I need to be and planning around that. And if it comes to like big things that are going to cost money, expansion, hiring employees, office build outs, whatever it might be, I'm like mapping and out, planning out. And I practice what I preach. I use financing for things anytime I can that makes sense. So, but I do that when the business is in a great place. I plan, I get approved, and the smart entrepreneurs understand this and do this, and they leverage their business to borrow money so they can do more and just grow faster. And it's different mindsets, and I think in this world that we live in today with business, I think you got to get really clear on like where you're trying to go, what you're trying to do. And I think either you need to keep it really tight and small and run really efficient and pull out whatever profit you can, or if you're going to try and compete, because it's very competitive in all industries today, you got to be in this like growth mindset, and you're going to need capital to go and do that. And you really need to plan ahead. I just see most business owners don't plan. And so when you go to the non-bank lenders, they're going to look at your cash flow. So they're going to look at financials. They're going to want to understand what's happening. Are you profitable? They're also going to look at your bank statements. Can you manage the cash in your bank statements? Are you going negative? Do your balances run really low in the bank account? Do you show that you know how to manage your money? That's what they're going to really look at. So if you are planning to go in growth mode, you really need to understand your options prior to that and borrow money prior to depleting that cash flow, because then just put your shoes in the lender and the underwriter. No one gets this, no one understands this, and no one does this. But if you don't have real estate, you don't have B2B receivables, you don't have inventory, you don't have heavy machinery as collateral, you have no collateral. So a non-bank lender, all they can do is go off of your cash flow and then also understand, like, what are you looking to use money for? Is it growth? What is that? How are you going to grow? How are you going to take their money, our money, and turn it into more money, right? So not only do you need to manage your cash flow and go apply for financing before you crush your cash flow, but you also need to be prepared to have an underwriting phone call and explain to the underwriter how you're going to be able to turn their money into more money.
Well, I heard this from a mentor early on in business. He said, "You never ask for money when you're broke."
Yeah, and banks like to lend you an umbrella when the sun is shining, and non-bank lenders will lend you an umbrella when it's like, when there's like a little light forecast, a little mist rain happening or whatever, right? But no one wants to lend to you in the middle of a thunderstorm,
That's 90% of people who want to borrow money are in a cash depletion, right? I mean, that's
and you're 100% right, David. But what's the root cause of that? And it's poor planning, typically.
Honest truth, Joe. I mean, most people don't understand planning. I mean, that they're not sure. I would agree. I'm not saying that you're wrong or anybody's wrong in this scenario. I would just say that the majority of people don't know any better. And it does make sense. It makes a lot of sense when you're trying to grow something, not to borrow money, especially if it's 12, 15, 20%. So it makes sense not to do it. However, the catch there is that most people just don't know the rule that you never ask for anything when you don't have anything. And that's a big deal, because they would think that it's contrary. Contrary means when I need money, I ask for it. When I don't need money, I don't ask for it.
Correct.
The bank want to operate on it. And you're right. If somebody puts themselves in a lending shoe, right? I actually just had this conversation with somebody recently. I just remember this because they said, "Well, David, I mean, why wouldn't they lend me money?" I'm like, "Well, first off, because you don't have any money." "Well, that's exactly why I need money." I'm like, "Well, how are you going to repay the note? How are you going to repay them?" I mean, they're like, "Well, we'll make sales." And I'm like, "But you don't have a demonstrated capacity to do that because you have no money."
Yeah, 100%. And startup money is the hardest money to get. Like, if you don't have sales, there's really no lenders out there that want to lend to you. Like, you could take a personal loan, but you still have to have W-2 income or something.
Well, I spoke at a conference. This is funny now that you made me remember this. I spoke at a conference earlier this year, and it was it was the National Chamber of I don't know, something. It was a state of Texas conference. I actually spoke at the state capitol. It was a really cool event, and the topic was that for this discussion was the inability for minorities to be able to access capital. They need capital, and they were saying minorities have a predominantly are discriminated against. And so they thought I was going to get up there and say, "Yeah, that's it. They're discriminated against." And I went up there, and this is what I said. I said, "Look, if you're trying to borrow money and you're not making sales, why in the hell would anybody lend you money? The problem that you're experiencing," I said this to a huge audience. I said, "The problem that most businesses experience today isn't a lack of lending capacity. It's truly a lack of the ability for the owner or its team to make sales. If a company can make sales, there is no institution that would not lend them money. However, the vast majority of people beg for money and don't have any sales." And
and that's exactly right. Yeah, and like the risk is so high. Like, if you really have to, if you're going to start something from nothing, which I did. I mean, you have to beg, borrow, scratch, claw, fight, use every dollar, personal money, credit cards. I mean, you name it, you just got to make it happen, borrow from friends and family and figure it out. No bank is going to lend to you, and non-bank lenders are not lending for startups, period. The only thing that you could do is credit cards and personal loans. And to get a personal loans, like there's a million personal loan providers out there today, you still have to have some sort of income or W-2 that proves and credit that you can pay that, right? So, the only thing that you can do, which is it's underutilized and people don't understand this, if instead of starting a business, go buy a business. Don't start one. You can use an SBA 7A to buy a business, and you only have to put down 10%. It's essentially like a leverage buyout. It's a no-brainer. Now, the business has to be profitable, and the business's profitability needs to support the loan that you're looking to take out. But, you need to have some sort of a resume. It doesn't need to be this crazy resume, but hey, like you've worked in this industry, you have some experience, or show that you have had some ability or prior experience that you could run this business. But it's a great product, and there's so many baby boomers that are looking to sell today. You can go, use an SBA. Let's say it's a $1 million business, you have to put down $100,000, or if it's 500,000, it's 50. I mean, let's just assume the business is $500K to buy. It's $50K. I don't care what business you're trying to start in your own. I know for sure that you're probably going to have to spend more than $50K to get it going, unless it's like a consulting business, like, and you're just, trading your knowledge for dollars. Besides that, any other business, you're going to have to, you're going to spend a lot of money getting it going. So,
oh yeah, and whatever that owner of the business you're buying has spent many decades in some cases to build a customer base, to hit that goal and that target revenue that you're seeing today. So I actually think you're exactly right. I think the allure of starting a business is to say that I started this from scratch, but that's in some respects ignorance, right? Because you just don't know what you're doing. So
listen, I started my company from zero, but when I started, there was nothing like it. There wasn't this business lending marketplace. There was no name brand. So I had to go create something from nothing. I had an idea, but looking back and knowing what I know now, if I was to start another company, unless it was non-existent, one, I'd probably raise some money, not use my own personal money, but separately, I would just go buy the business, and I would use, SBA or bank financing to finance it. And I wouldn't go out and start it from zero if I was able to go and buy it. I absolutely would do that. And, there's companies out there that you can buy for 300, 500, $1 million, and then obviously it just keeps going depending on size. But if you can't figure out how to come up with $50,000 or $100,000, then don't bother starting a business, unless it's like, again, you're just, you're a consultant, and, you've had knowledge in something, and someone's just going to hire you, and you're in business for yourself, and you're just, you're in a consulting business. But for the typical, retail business, blue collar business, or any other business for that matter, that's got people, processes, marketing systems, if you can't pull together 50 or 100 grand, you're really setting yourself up for failure, because doing anything on your own that's going to need that stuff, it's just going to cost you, way more.
I see that every day, man. I actually see many business owners who are trying to do it all on their own, trying to finance things. I like the acquisition model so much. We're in the process of making some moves on some other companies right now that would be acquisitions. And by the way, I'm honest truth. I think if you have a demonstrated capacity to produce a result, which means you've been in business or in a business as an entrepreneur, maybe working for somebody for many years, maybe you're the manager or general manager of a company, and you have shown that you can manage that company and do well in it, this might be a great opportunity, like you mentioned, to either purchase the company that you're working for or look for another one that might be for sale and take that on. And an SBA lender they should be begging you to take the deal, because it's such a no-brainer for them. I mean, you're a good operator, you know what you're doing.
100%. And there's so many baby boomers today that their children don't want to be involved in the business. So, I mean, there's like, a few $1 trillion of baby boomer businesses that are about to transfer, and without buyers. So there's massive opportunity out there today, David. If you're thinking about doing something, it really is a great avenue. And, I'll just add another thing, like entrepreneurship has become made very sexy today and appealing and seems so amazing, but it is hard work. And, you go online today, look at stuff, YouTube, social media, whatever, and everyone makes it seem so easy and so cool. And the reality is it's not. It's awesome once you get to a great place. You have systems, process, people together, but it is relentless and it's hard work. And in the beginning, if you have not owned a company before, even if you've been a manager, you will work harder than you've ever worked in the beginning. And you need to really be clear on that. It is absolutely not, for everybody.
Well, I agree with that. And I think that there is an allure to opening your own business or being your own boss. The way I kind of see that is I can already tell. Honest truth, I can tell when somebody's gonna be successful and when they're not. I mean, maybe I'll be wrong every now and then, but I'd probably say 8 out of 10 times. And what I like to say is that how you perform today in whatever it is you're doing, whatever that may be. It could be as an employee anywhere. It could be, running a business. It could, whatever that is. If you decided to go independently to do the same thing, that same work ethic transitions. So if you're shitty at it already, and you think by being your own boss, you're going to be very successful, the truth is it's not going to work. You have to be, the only people that should be saying, I want to leave this company, start my own, or go buy my own, or do my own thing, those people need to be the A players in a company. They got to be the A team, because the A team will always win. The B's and the C's, they aspire but never do anything. They're shitty wherever they go. And so,
someone told me this quote recently. They basically said, the C players, they use the word loser, but we'll use C players here. Always complain that they're working too hard and too much. And the A players, the winners, always feel like they're never working enough. And
right.
And it's so true. And if you can't get into the office early, you can't get in on your start time, you're not willing to put in extra work. If you think it's going to be easier by owning your own business, you're definitely wrong. People think that they're going to be their own boss and it's going to be easier. Initially, you will work harder than you ever worked, in your life, hands down.
Yeah, I agree with that, man. The point is, I guess I always think about, I tell people, actually it's so funny, I'm in with this, but I mean, I've managed teams for the last 15 or 16 years at some capacity. I mean, I've had as many as 250 employees at one time. And today I manage a smaller team, about 50 people. And there are times where I've said in the past, and I probably would say it today too, look, anybody here, I would go into a meeting, this was many years ago, I walk into a meeting and people, I could tell they don't want to be there. And I would say, look, you know what? You don't have to be here. You know what? You could go open your own business. You can compete against me. You can take everything you want. But let me just tell you something. If you're not being able to perform here and you're shitty here, I would say that. If you're shitty here, you're going to be shitty over there too. So it doesn't really matter to me, right?
Yeah.
You're going to do whatever you want. But it doesn't matter to me. I know who's an A player in life. I can just tell by meeting. I mean, Joe, you're an A player. I know a lot of freaking A players. But I know there's more C and B's out there than
yeah. It's a hustle, and it's a, to your point, it's a hustle. If you want to accelerate, in someone else's business, and in a career at a company, or in a career of owning your own business, regardless, if you want to accelerate and win and do more and make more, you've got to be an A player in what you're doing. Although, and it doesn't matter whether it's on your own or working for somebody. If you're not willing to put in, the effort, the work, go above and beyond what your job description is, you're never going to, excel, whether it's in your own company or, or someone else's. And I think the people that really realize that, do well. And it's all about, going above and beyond when no one's looking, because everyone's always watching and everyone knows, like who's, going above and beyond and who isn't. And, people think that, their manager, leader, owner, aren't, paying attention or watching, but everyone knows who the A players are and who aren't. And, if you're, wondering why you're not excelling, you really gotta, really ask yourself some serious questions. Or, are you really working hard and going above and beyond?
Yeah. So recently I asked a kind of a question on one of my social platforms, and the question was, how much energy would you be willing to contribute to your career if your income doubled today? Right? That was a question I posed. And I got so many different variations of the answer, right? It was like, I'd do anything. And some are like, I already do enough. And then some people are like, I don't know, man. And I'm like, it's actually a trick fucking question. The reason it's a trick question is because if you were giving all that you could, your income would double.
Yeah. Yeah.
But most people would have to wait to get the money before they would do it, right? And
that's the problem. Yeah.
A real entrepreneur understands that you don't double your money because you want it. You double your money by earning it. And
100%.
And typically you've got to work literally years of your life getting paid nothing to eventually have something.
Yeah. And I think people are willing to make that sacrifice. It's well said. And it shouldn't be, when you give me this, I'll do that.
Yeah.
It should be, I'll do that and I'll just get this, right? Like, and the folks that do go above and beyond in my organization, I want to give them more, and I think it's a big miss from a lot of, just a lot of people, whether, employees or, owners, it is a hustle. It is relentless. And that's life. And it's just a matter of how far you want to go. You can go really as far as you want. It's just a matter of what you're willing to sacrifice and how disciplined you're willing to be. It all comes down to sacrifice and discipline. And, in the world that we live in today, everyone wants things yesterday, fast, with minimal, sacrifice and work. And they want to do all the fun stuff right now. I don't know. Back in the day, when I was growing up, we didn't have social media. I mean, it just started to come out, and as like the end of high school, it was, I don't know, MySpace or something like that. But, even then, like, you didn't get to see all these different things, that all these different people have. You didn't get to follow around famous people or billionaires. You never would have like seen that. So people see that stuff today, and I think they're like, oh my God, I want that. I need that. All that stuff doesn't equal happiness, but I think it discourages more people than motivates people, because I think people think, oh, I should have that too. But then no one's really understanding like what some of those folks have done really to get there. Or maybe some of them just came from generational wealth and it just is what it is. It
is
but,
what it is.
Yeah. So it's
so Joe, how does somebody get a hold of you if they're looking for small business lending? They're trying to excel or grow their business, buy machinery, equipment, those kind of things. How does somebody get a hold of you?
Yeah, if you want to explore your options, really understand what you could qualify for, we've got an awesome team of business financing advisors. We're about 100 employees. You can just reach out to us, or you can go to nationalbusinesscapital.com. You can get started right on the website, or you can just, call us right there from the website and, have a free consultation with one of our team members.
Any state?
Yeah, all 50 states, all industries. We focus on folks that are doing, $1 million in revenue up to about 50 million. We've gone, higher than that revenue. We've gone a little bit under that in revenue. So, happy to, help and, help access capital. I mean, that's what we do. And we offer, like I said, a number of different lending products. So we're not just focused on, one type of lending.
Cool, man. Do you have a social media, maybe somebody you'd want them to follow you on?
Oh yeah, if you want to follow me, I'm constantly putting out stuff like this. You can follow me at Grow by Joe.
Grow by Joe. Look at that.
Grow by Joe, helping people grow.
There you go. Grow by Joe. I actually, that's so funny. I have a client. Is it Go with Joe or Grow? It's so funny, but I actually have is it Go with Joe, Grow with? She's a fitness instructor. They've got 4 million subs on YouTube.
Oh wow, that's awesome.
She's legit, but her name's Joe, and I think it's Grow or Go or something very similar, dude. Now
It's funny. You got to introduce us. Make the intro.
So, Joe, thank you so much, man. This has been interesting. I definitely believe that there's a need in the world for what you do, and there's a lot of people who could benefit from this. So if anybody's out there and you need small lending and you're looking for somebody who can help you, who's got your back, who understands the industry better than anybody else in the country, who's really working on a high level to support you and your growth, you gotta go with Joe. All right.
Good stuff. Well, thank you, David. Thanks for having me on. Great conversation.
Thank you, my man.